Welcome to another episode of Heartland Market Talk on the open range. Well, in today's headlines, gold resurging after stumbling after Monday, hit a new all-time high of just over $2,380. The big break that occurred after the CPI number had many thinking gold was done for a while, but the PPI numbers today, the Producer Price Index, fueled a different attitude, and gold resurged itself late in the session. We're back to 2,380. More about that when we go on to insights for the Heartland Insight section here of our show. On the oil market, a stumble today, not following oil higher as a refinery outage down in the New Orleans area. One of the largest refineries down there producing some 625,000 barrels per day crush to gas and diesel. It might be out for a few days, and all of that oil will just go back into our inventory numbers, causing the pause in oil prices today, which might be just temporary as we watch Middle Eastern developments and Iran's threat to take the war to Israel. Now, La Nina is also back in the news. U.S. forecaster gives it a 60% chance it could develop quickly from the El Nino we've been into to La Nina. And it could occur here later this summer, which will be critical for crop production as the La Nina can bring hot prevailing winds into the Midwest, which could curtail some of our production. Now it's time to go into Heartland Insights as we discuss the USDA crop report that was out today. Today was the WASDE April crop report, and the USDA numbers for grain stocks were out. They did lower corn. Last month were 2,172,000,000. The street was looking for almost a 70 million bushel drop, but we did get a 50 million bushel drop, so the trade was not excited about the action. Prices softened on the day. They did improve our grind for ethanol and improved exports, but many think they have much more work to do in the May upcoming report. The bearish action was from the soybean stocks. Last month, 315 million bushels. They jumped at 35 million bushels, well over our average guest here of 319 million bushels. Reality check was they lowered the exports, increased some imports for us, and also increased some of our residual usage. Now on the wheat trade, 673 last month. Guesses were it would increase by almost 20 million bushels. USDA jumped it here some 25 million bushels, again, mostly on our export problems. On the world production numbers, here's where things stood out. They left everything unchanged, almost like they didn't show up for work. Last month, 124 million bushels on corn. They left it unchanged. This morning, Brazil was out with their own crop report. They lowered their yield data again. They are substantially below the USDA's numbers, especially on the soybean number. They stayed asleep on this number when a guess was for a reduction of at least 2.1 million metric tons. Brazil this morning on their numbers, they have this number down to 146.5 million metric tons, literally a 350 million bushel difference, which is equal to our carryout. What is the USDA scared about? Why are they not lowering this yield? If it's anything to keep prices low until we get later in the year when maybe we can be assured of a better crop coming here, then we can start lowering the Brazilian crop size. Even on Argentina's corn and soybean crop, USDA woefully high compared to where Argentina is, under 50 million metric tons. USDA is at 55. So the USDA at work of probably trying to keep prices from getting scared, keeping inflation down, because right now everybody's scratching their head that they're only using satellite imagery for Brazil with some field checks, whereas Argentina and Brazil have more boots on the ground, get an idea of what their crop size really is. As we move to the charts, spot gold in the news again. Look at this here. Back higher late in the session. We are climbing, probably heading for new all-time highs before the week is out. And we look at silver. Silver climbing as well, too. And this is exciting along with gold. But keep in mind, we call silver the poor man's gold because, frankly, silver back in the 80s here, if we go back in time, hit $50 an ounce in 1980, 2011, $50 an ounce. Gold was $800 in 1980, was $2,000 back in 2010, and now silver with gold at $2,400 almost. We have silver here at $28 an ounce. So it's exciting, but it's nothing like the gold, which is the true currency, is playing. Silver is a commodity. That's why we call it the poor man's gold. Over on the crude oil, retreating continues here. As we talked about the headlines, production offline now down on the Gulf Coast. The prices have retreated, but as you can see, aggressive trend line could say crude oil could still hold the $84 valuation and still be part of this spring uptrend where prices bottom in the winter, move higher into the May, June time window. We're somewhat targeting a re-challenge of last October's highs near the $89 to $90 range. Could be something that's in play, especially if Iran, which again, we see these daily on and off again stories of bringing the war to Israel. This would definitely be a problem in the Middle East, as then Israel would be dealing with munitions heading over to Iran, which would have the Middle East tensions extremely high. Well, as the report wound down today, we can see the corn market back to its lows of the month of April here, essentially. We still have our spike low in February. The trend remains sour as we apply things like moving averages. This is the purple line. Tagged it 2 weeks ago. We just can't seem to get any life here yet. If the USDA would have acknowledged the losses in Argentina on corn and the losses in Brazil on beans, we'd get something going here. But the market is sour. Soybeans, as you can see here too, retreating today's action lower, but did recover off of lows as everybody was so bearish going into that report. But again, we've got this moving average resistance activity that we have to see upward pressure through these prices to change the trend. Now, as we look at Kansas City wheat, the Kansas City wheat market has been based out, making an initial low early in March, but we have this big sideways congestion. And as you can tell, we've seen some downtrend resistance starting to push out. As we look at the trend line action, we can see here activity is through the negative trend for the winter, but we just need something to the upside. And the dryness that prevails down there now could be the ticket that gets us climbing in price. But for now, Kansas City wheat has resistance near that $6 value until we're solidly closing above it on probably dry weather concerns down in the Kansas area. We're just caught stagnant. And keep in mind, Minneapolis wheat looks the same way, and Minneapolis wheat needs leadership from the Kansas City wheat chart. Now, cocoa stalled out early in the week, and now we are on to new highs again, heading well over $10,000. Now we hear stories of new trees getting planted by a lot of the farmers in South Africa, especially in Cameroon, where they were going to take years to get production out of these trees. But we know they are forward thinking and they want production to grow. Meantime, cocoa maintains its expense, and it's going to be a matter of time they're going to find it flowing through to the consumer via higher prices or smaller packaging. Remember, you can always call us at 701-222-0221 or visit us online at heartlandinvest.com. While you're there, don't forget to check out our Heartland Market Talk podcast and sign up for our daily newsletter. And for producers, remember, we offer crop and LRP insurance as well.